This is London with MarketHedge. We've got some action on Bitcoin. Let's take a look. We needed the weekend to get us up and out of this bull flag, and we did it. I went over a nice trade, guys, yesterday, and we've got just some brief updates. This specific trade, guys, currently about 50 G's in the profit. I want to talk about where this trade originated, and then we'll talk about the additional trade, which is about 160 grand in the profit. I'll talk about where that trade originated. We'll also talk about the target. We have nice news on a target. However, we've got one hurdle to get up and over. This is London with MarketHedge, former hedge fund owner, private, non-SEC, non-financial advice, taking a look at the preceding flag. I want to remind you guys, this small little trade we took. Remember this. Remember stacking the below at the very bottom when everybody turned into a bear. Why did we start to stack? I like this preceding pivot. Yeah, out through this area. And what did we pick up? This was that $1,000 trade. Guys, it turned into 50 G's. So not bad, not bad. Remember about, 4 or 5 positions that turned into, let's see here, 5 positions at about $200 a piece. There we go. 220 in margin. Leverage 220. So each of those positions right now is worth about 10 G's. So that's nice action. In terms of the secondary, let's talk about it. And what I want to show you, I don't want to brag about the trade. I want to show you, and guys, we brought this up, brought you guys a video on it. If you still own this position, congratulations. But taking a look at it, in terms of stacking trades, just do know that this is what we accomplish on MarketHedge, MarketHedge.pro. In terms of that, yeah, you want to own the bottom of the bull flag. We all agree without a doubt. Now, this secondary trade was what? It was different. This is that 161K currently in the profit. Not bragging, and you guys know because it's been pushing. Had to push to get this back up. We'll see if it pays off. We'll see if this trade pays off. We'll see if this trade pays off. In terms of one on the left and one on the right. In terms of this specific breakout, just remind yourselves, and why is this relevant? Because currently we're in a breakout of a bull flag. You guys got that right. What did we do here? Well, we had broken out technically. What did I do? I stacked orders below. You got it right. It's stacked orders below. What did we pick up? 4 or 5 positions. There we go. 4 or 5 positions. These were each $5 grand at 75x. So those $5 grand positions at 75x, let's see what they are. They're about 40 G's in the profit each now. So you can start to do the math in terms of, say, well, I like to trade heavier than that. Well, no surprise. Okay, you're in the right company. In terms of that, I'll just say one of the best features of our MarketHedge.pro, pay attention, is that we can do a margin bypass. A max margin bypass. What does that mean? That means if the maximum margin I could include at, pay attention guys, if the maximum margin that I can include at at a specific level of leverage is, let's say they limit me at, I can only do $5,000 at 100x. Well, I can do $5,000 at 100x. And then I can do $5,000 at 99x, $5,000 at 98x, $5,000 at 97x. So the origins of this process, really in terms of stacking and the leverage, is to operate as a margin bypass. I don't want to get too complicated because some people just be like, what are you talking about, London? But listen, for those who get tapped out and they can't put any more at a max leverage position, you know exactly what I'm saying. It's like, oh yeah, of course, I want to trade 500x, but it's only let me put in 5 G's. Well, then we can stack 100 levels of it. Yeah, we can stack 10 levels of it, and you get that same, essentially the same leverage. We'll step it down by 1, and you'll notice that on these positions. Take a look here in terms of the leverage. What's my leverage at each level? Let's just pay attention to this real quickly, and just some new information for you. Taking a look, it does step down, 222, 221. There we go. So 220, 219. So this is more the complete story in terms of MarketHedge, and what it really offers is a margin bypass at high levels of leverage. So this system is, yes, for the technical trader that wants to get in at the prior pivots, that wants to hedge. It's also made for the King Kong big hands trader who needs additional margin at these really high levels of leverage. So it's very custom in that regard, guys. Very custom. Do some thinking in terms of that. If this applies to you, hey, you're in good company. Okay. In terms of the breakout, I brought this up below. That was the breakout here. Those were those 75x orders at 75x orders at 5,000. Carrying up well, doing well, 40 G's in the profit right now. We went through this same issue here. we went through the same, right? I warned you a little bit about a breakout trade at this level. What picked up? Some stacked orders below, right? Still a great strategy. You're just seeing that natural confirmation is a great area to not sweat it and just pick up. We actually picked up in this zone here. You guys saw that before things got a little difficult on that breakout in this zone. So the question, the big story is this. We've broken out. Will the bulls get tested and pushed around a little bit more? Will they? Bitcoin's famous for it, but what could save that? Well, some good Bitcoin action up and over. I'm going to say the 4-hourly. We're back to that 4-hourly RSI, and just take a look at the back testing. This type of overbought turf, if bulls can get up and out, that's the rifle up level of action. That yellow line there in terms of that overbought. The only other straggler technical that I see that we really need to be kind of cautious of, or at least aware of, is the following. On the daily, we've got the daily top standard deviation on that Bollinger Band that's coming in at 120. If we can even get there, I'll say if we can even get there. Now that's going to we're going to need to flip that, and bulls are going to need to accelerate essentially on top of it or through it, like we did on the way up to this level. So that's not an easy thing to do necessarily. Look at the back testing of it. How many times does it operate as a resistance? Quite a few times, guys. Quite a few times do we pull back from that. It's not easy to get up on top of that, but we can do it. So we're going to need some momentum and some big checkbooks going to need to come in terms of the street and some sovereign wealth funds, etc. on Bitcoin. It's been very resilient. I just want to encourage you all. Remember that never be overexposed to any higher price or in any one position, and always maintain heavy cash reserves. Let's go to the shorts. Anybody interested in a short? Now, the same way that we picked up below here on the trades I discussed yesterday at the oversold level that we stacked below, which were beautiful, right? Those were nice trades. Those are nice, guys. Nice way to deal with those buying opportunities, stacking and looking for that swing trade. You got it right. Now, the swing trade, we're about there. Let's say we're there. In terms of the swing, meaning from the oversold to overbought territory on the 4-hourly RSI. We agree? Yes, we agree. Now we're there, guys. We're depending on the time frame. These are these levels. It's hit and it's pulled back. It's hit and it's pulled back on the specific being oversold to the overbought turf. Let's just say that swing trade. We've hit it fully. Now the issue is going to be this is the time for the shorts. I hate to say it, but this is the time where those with short interest are letting it be known. Why? They're going to do the same thing that we did at the bottom. They're going to stack up and above. They're going to have some way of capturing this interest, let me say that. And to the extent that that is something that continues to pay for them, let's let them do it. I'm going to stay bullish. You can see some nice hits off of this specific overbought turf, right? You see a lot of rejections depending upon where you're at in the technical cycle in terms of the patterns. You're just seeing some really nice shorts from that level. So I hate to say it, that RSI and that green on the chart is the actual RSI overbought. So or oversold, depending upon what you're over or under. So all to say, I am not going to short. I'm going to carry the longs. I'm one-sided right now. Typically on Hedge, guys, I'd be two-sided, but I want to maintain the push to my target, and let's discuss that real quickly in terms of where that target is. We're going to be looking at the low to high here on this specific bull flag with a move to the upside, downward sloping channel, and what do we have? We've got the specific carry up, which is 125, 126. Let's go ahead and include this in the entirety of this. Let's include this whole move up, which would be a lot better. I'll tell you why, because if we can say this is the entire flagpole, and it's really a bit of a stretch to get there, but if this preceding move wants to repeat, then that's going to get us the magic number. Then that's what I like, guys. It's pushing it a little bit on this specific micro technical, that micro flag, but that 135 is in play then. And what does that match up with? You guys got it right. That 135 matches up with this larger bull flag. Good news is we're having talks about bull flag upon bull flag. That's nice. We'll take it with Bitcoin, right? These are the times to try and be bullish as much as you can, right? I'm laying off of those shorts. Now, in terms of the specific carry up feature there, you can see how this flagpole would match up with this more extended move up flagpole there. And then we've got the micro in cadence with this macro. Then we've got everybody looking at the 135. So that's the level that I'd like to see. And again, that's where I'm going to ring the cash register if and to the extent that we can get there. Now, I've drawn a yellow triangle on the screen just real quickly. If you are achieving exposure to Bitcoin or starting to trade it or really trading it, my recommendation is that you consider for yourself and fully evaluate what your monetary exposure looks like on Bitcoin. I always preach, guys, and I literally preach it in terms of cash exposure and heavy cash reserves always available, larger reserves available for the lower levels, period. I never back off of that, you guys know, and we were double down in that $15,000 zone. You guys know that, right? Yeah, that was the time to be loaded up when we were down in that 15,000 zone area. And I had told people Bitcoin has 3 levels. Remember this, you all know. It was what? It was 60, it was 45, and it was 15. So like a glove. The commentary fit like a glove. Hopefully you guys took it full advantage of that, and you've got some deep pockets rolling around right now that'll never get touched or won't get touched for a while. This is London with MarketHedge. You guys know we need that upside momentum. It's got to roll through. Bravo to everybody who's trading and making money, and I know who you are, and you guys know who I am too. It's good to be in a small group. I appreciate it. This is London with MarketHedge. Let's go get them this week. Yeah, work on your side trades. Work on that 100 rounds. If you're finding that you're not as consistent as you want to be, go ahead and hit the 100 rounds again. Guys, that's 100 repeat trades until you become consistent. Booking 4 in a row, 5 in a row, but then you can increase your margin. That's just what I see as being successful. You guys can pan it out. Give me your opinions in the comments if you choose to. Let's have a great week. This is London with MarketHedge.